Hey guys, thanks for your interest in the video. I'm the Swing Trader, and today we are going over my swing trading ethos. That is how I perceive the markets in my mind. Let's go. This video should help you understand what I'm thinking about when I trade the markets live on Twitch. Now, firstly, it is so important to understand that people, human beings like you and me, are emotionally tied to money. Like intrinsically so, incredibly so. I don't care who you are, if you wake up and you find out all your money's gone,
My money! I've lost all my money! Have you seen
you're likely to get a little emotional. Okay, inversely so, if you win the lottery, I expect you
I won the lottery! I won the freaking lottery!
to lose your mind a little bit, and likely your emotions with your mind. And when I say likely, I mean for sure. So we now know that people plus money equals emotions. Okay, how's that for math? I like my math with letters. Let's keep going. Let us also understand that a stock chart is simply a representation of the many decisions made by a group of people over time. Again, that's people making decisions about their money, likely done in an emotional way. Moving forward, let's now imagine that every stock chart that you see is a little room. And on one side of the room, we have buyers of that stock. And on the other side, we have sellers. And there's a table right between the two, and that represents the place and the price where the trades are made. Now, when a stock is moving up steadily, that means that the buyers are sort of winning over the room. They're kind of rushing in, kind of, oh, I'm buying, you're buying. Oh, there's a bit of a commotion happening. Oh, I'll buy mine at a premium. I need this thing. I want some. Let's go. More and more people rushing into the room, pushing the table and the price up. Now, when we have a stock that's moving down steadily, that means the room is filling more and more with sellers, and they're starting to sort of shout over one another, oh, louder and louder. Oh, you're selling, I'm selling. Oh, I got discounts here. This stuff's got to go, buddy. It's got to go. In this scenario, the sellers are winning the room as they all kind of rush in and cause a commotion, pushing the table and the market price down. Now, what situation do we have left? Well, that is a stock that's going left to right, okay? That's hot sideways or horizontal trading. Now, in this scenario, we can imagine a very orderly, quiet room. Probably just look like people are just playing some cards, you know, chilling. 99 cents, sure. Dollar, yeah, dollar. Dollar one, yeah. 99 cents, yeah. Dollar. No surprises in that room. Okay, now, question to you. As a swing trader, which room do we want to be a buyer in? Do we want to be running into the room full of buyers, clamoring over, trying to buy everything at a premium? Do we want to be in the room of sellers and picking up shares at discount prices constantly, lowering our average? Or do we just want to be chilling, playing bridge, playing cards, hanging out? Which room? Think about it. I'll give you the answer. Neither room. Yeah, I guess that was unfair. It was a trick question, and I apologize. Because where we want to be, ladies and gentlemen, is in the hallway, okay? Not just any hallway, but the hallway just outside the room of the quiet card players. We want to be chilling near the room until we see someone or a group of people walk into the room with cash in their hands. Just kind of peek in and they just see, they kind of buy up all the $1.99, $1 shares, and all of a sudden they're putting in more, buying more, $1.04, $1.05, and it's $1.06 now. $1.06? You guys, that moment. That's the moment. That's the moment where we jump into at $1.06, $1.07. We put in a little bit of money. We set our stop, and then we go back to the hallway and listen to the next card room become something that's not the card room quite anymore. That moment. Okay, that's the moment. That's the moment we put our money down. We don't put all our money down, we just put some. And then we head back to the hallway so we can find another one. Okay, so that probably seems like a pretty random metaphor, but it's meant to highlight something important, and that is this. Is that you cannot trust what people say, especially when it comes to financial markets. I realize that's kind of ironic coming from me in a video. But it's true, the bias is just too fully built in. But money Money never lies. We've heard that in every movie we've ever watched. You see, I know that as one individual person here trading the markets, there's no possible way that I could ever know everything there is to know about all the companies on the market, process all the new information about all the companies, assess that from one to the other. It's just an impossible feat, so I don't even try to do it. But lucky for me, there's already people doing this work all over the world all the time. There's people, smart people, assessing and weighing the risks of companies, reading all the market data, listening in on all the phone calls with the CEO, reading the financial statements. They're doing all the work, and when those people believe in their research, they put their money down on the table. And so do we. So maybe some of these people are insiders of company, and they know something's happening in the near future, or maybe it's a hedge fund manager who knows that the industry is about to boom. Maybe it's a gang of Reddit users just trying to get the next GameStop going. It doesn't really matter who they are. What matters is that they believe they have information, and they believe so strongly in that information that they're willing to put money, lots of money, down on that. So we do too. Now my mentor, Tyler, told me that the markets, they're like the ocean, and it's full of sharks. That is, these big movers, these hedge funds with incredible amounts of resources and cash. They scour the sea hunting for profits, all right? Now we, as small individual traders, we have the opportunity to be the remora. Now that's that small fish right there. Okay, that guy just swims underneath the shark's mouth, eating up all the scraps and that the shark hunts for and kills for, and just takes the cue from the shark, and thereby never basically goes hungry and is never in any real danger. This is a smart fish. Hashtag be the remora. Okay? That's what we're trying to do here. So, in a way, when we're swing trading at our best, we will be buying at insider prices without any insider information. And that's sick. That's sick. Now, I realize that was all a bit weird and random and theoretical, but I wanted to walk you through those visualizations because it's helpful once we start jumping into analyzing charts and looking at certain opportunities. It's nice to have these metaphors in mind so we can reference them, and it will help us keep ourselves on point. Great. That wraps up the video. Stay tuned for the next, where I'll be going over exactly the types of stocks I look for when I trade, with some examples from the past few weeks of trading. We'll be able to put some of those metaphors to good use, so don't miss it. Be sure to subscribe to all my things. And, on Twitter, I'll tell you when I go live on Twitch. On Twitch, we'll hang out. Be great. That's all for now. Be kind, trade smart, and we'll see you in the markets. Peace!
Well, looks like it's just the two of us now. I just...